Hey everybody, Jake here with TrendSpider to go over a special edition trading into the elections with our guest, Price Action Trader, aka at PAV Leader on Twitter. A huge welcome. Thank you so much. First time guest on. Could you tell us a little bit about yourself, how you got started trading before we jump into some charts and some overall election charts?
Absolutely. Hey, Jake. First of all, thank you so much for the opportunity to share my view and introducing me to your audience. My name is PAV Leader. People know me on Twitter as PAV Leader. I've been in the markets for a little over 15 years now, and I'm from India. Have been trading Indian markets for quite some time before I moved to US last year. I work for an IT consulting company as a cybersecurity professional, but charts have been very close to me, and I'm very passionate about chart, especially coming to price action trading and volume based trading. So in today's session, I'll be talking about how I trade, what do I look at the markets, and some of the charts which I have already prepared to share with your audience. So looking forward for this exciting session. So let's go for it.
Let's do it. Well, thank you so much again for being a guest. So, what I'm going to do is I'm going to quickly go over a couple charts, going over some of the seasonality into the election years, because,
Mhm.
we can go and we can chart out election years and all of that. But what's really important is just looking at the numbers and looking at the historical data. And so, what I'm going to do is I'm going to go over SPX, VIX, just the VIX, and then
Mhm.
Apple, just to look at some different statistics here. So, what we have up right now is SPX. This is the monthly chart. First thing on the technical side that we can see here is essentially we are having a little trouble getting through this longer term area of resistance on this trend line here. It has acted as a level of resistance. We even tried to poke through here a couple months ago, but now we're kind of finding a little bit of a stalemate here at the this area. But what I really want to focus on here is the seasonality. So you guys can see the seasonality here. And what I really want to look at is into November, looking at the last 41 years, we can see that the S&P 500 goes up 73% of the time, or has gone up 73% of the time. We don't know what's going to happen in the next 2 months, but this is kind of the historical data that we have. So this is a little biased though, or it's kind of normalized because we're not just looking at election years. We're looking at all of the years. So what I want to do is I want to exclude, and I already have this copied, just paste it here. These are all of the non-election years. So going back since 1980, I've excluded all of the non-election years, and you'll see something interesting on SPX. One, you can see October only had a 45% win rate, which is interesting because October was not a great month. So it kind of makes sense with that seasonal information here that we have using election year data. But then what's really interesting is November and December during election years have a 64% and an 80% win rate, which is not bad. I mean, that's over 50% win rate during these 2 months during the election. And we'll just have to see if this actually kind of continues to be kind of a bullish signal. But the thing is, if we look at Apple, you'll see something very different. You'll actually see since 1984, I think is the data that we have going back. You'll see that Apple is not the same in the same wheelhouse here. Apple actually only has a 30% win rate during election years in the month of November. And then in December, it's only 44% win rate. So looking at Apple versus the S&P 500, we are seeing a little bit of a discrepancy here, or at least just the fact that Apple does underperform as far as a win rate goes compared to the S&P 500. And if we look at the VIX, VIX is pretty correlated with SPY, but it's interesting to see here that the VIX only closes up 13% of the time since 1990. That's the data that we have going back for VIX. And so, it's not shocking that October was very green because looking back over the last 30 years, October has closed green every single month. During election years, the month of October has always closed green for VIX, which tells us that clearly uncertainty into the elections is a real thing, and we saw it once again this year. So these are a couple things that I wanted to point out here. Just the fact that the S&P 500 is showing a pretty decent win rate going into the last 2 years of an election. Last 2 months of an election year. But then we do have that kind of discrepancy with Apple. And so what I want to do is I want to pass it over to you, and let's look at some other charts, kind of looking at the technical side of things to see what things are looking like into the rest of the year, and what you're seeing and what we're kind of seeing together.
Sure. First of all, Jake, thanks for bringing that seasonality stuff. I mean, this is definitely something interesting. I never thought that we could even make some sense out of that data in this way. So definitely something new I learned today. Now let's try to add some technical analysis into that and see the same charts, what the story around from the technical perspective. So what I'm going to do is I will talk some of these charts in the right hand side, what you're seeing right now, and we'll start with the S&P 500. So right now what you see is the S&P monthly chart. From price action perspective, how I trade is that as I said, I'm a price action trader. I look at some supply and demand zones and see where exactly the supply and demand zones are working, and we'll see how the rejections are happening near supply and demand zone. And if I look at this particular chart, it's a monthly chart, and I see that this is the demand zone at the monthly chart where price has spent a lot of time in the historical time, and
Mm-hmm.
now a little overstretched. It has made a new high in the month of August, but it is not sustaining those new highs. It tried to breach it 3 times, and has failed miserably. So, and I'm also seeing this extremely stretched, so there may be some sort of breathing or some sort of cool down which is expected. And if I look at the lower time frames, let's say we go to weekly charts, so that's the on weekly charts, the same thing is happening. So the nearest demand zone what I see is somewhere around 320 zone. This is the recent highs which it broke a few weeks ago and then made a second attempt, but it failed. And with this high momentum, candle, it is still trying to kind of stay within this thing. So as long as it is holding this 320 range, we are good for an upside. But keeping this particular context where it tried to break this twice, but it is not doing the same thing, I'm hoping that if it doesn't sustain this particular level, which is the high of this candle, we may see again a test of this demand zone. And just to see how things are looking at the lower time frames from a multi time frame trading perspective, if I go to a daily time frame, this is what I see. So let me just quickly remove this. So that's what I see on the daily time frame. So right now the range of SPY is somewhere between the recent highs like 358 and this demand zone. If you
Mm-hmm.
see that after breaking this recent high, it took another support and consolidated in the same range, 319.20 range, and then it broke out and it made a significant new high after breaking this. So from price action perspective, I do consider this particular zone as a consolidation zone, and it will act as a basically this is supply turn demand zone. And
Mm-hmm.
next time again it basically came here with a high momentum candle, but still it couldn't breach this level. So like this is a third next time, like basically it's testing this particular level. Today it opened up but it couldn't sustain, and of course there is election fever. People are not able to take decisive decisions here right now whether it will go up or down. So of course tomorrow and in the upcoming days we will see more clarity. But as long as it holds this demand zone, people should be looking for, or I would say I would look for some sort of long calls as long as it holds. But the moment it breaches and closes below this, then of course it possibly will travel to the next demand zone, which is somewhere in the 300 or 299 range. What do you
And
think, Jake?
Well, first, I love the fact that you're calling these zones, because I'm a big believer that, there's not just one price level to watch. I hear a lot of
Yeah,
people say, "Oh, if we break 319 and 65 cents, we're done." And it's like that's not how it works. The
correct.
markets are not that perfect. There's going to be people that get margin calls. There's going to be people that become impulsive and buy really
Yep.
strongly at a level, and you're never going to have a precise area. So the fact that you're highlighting these zones compared to just one level is really really interesting, I think. And I think it's also interesting you mentioned if we did break down, not only was that area that you highlighted a potential demand zone below, but it
Yeah,
was also that psychological $300 area, which is just
right,
always going to act as that psychological possible support area.
right. And at the same time, if I look at a little lower level, which is this is the level or the time frame which I trade as a swing trader. Right?
Hmm.
As I said that I'm a working professional, so I don't do the charting on a daily basis. So whenever I have time, so I look at the larger time frame like monthly, weekly, and daily, and then I take trades on 65 minutes time frame. And if you see this is the, if you recall some time ago when I was watching this particular level, it took couple of times the supply and then it broke down here. So basically I was short at this level. It gave if you see the inverted hammer here, but this was just a signal, not a confirmation. But the moment it broke this level at the close of this, I mean, I took this trade and then carried over to this and basically consolidated here and booked the profits here. So I always say that use supply and demand zones to book profits for your long and short position, depending on which kind of positions you are in, and then see how price reacts to those zones. And if you see a price confirmation, it does not break, then of course you can go long or short depending on what positions you want to take. So that's how this particular level acted as a supply zone couple of times. And then this was the demand zone which was previously drawn. I showed it acted as a demand zone. But would you buy here, would you buy here? That's the question always which comes to mind. How do you trade these kind of levels? So
Love it.
since yeah, so since this is a 65-minute time zone, how you want to do is you need to see whether the structure is being broken in this particular time frame. So if you are, so basically, if I go a little basics into this, every trader should have one time frame as an execution time frame. And execution time frame means that's a time frame where that trader would take trade on, right?
Yep.
The view can be formed one time frame above or two time frames above in the consolidation mode, but the execution should always be fixed in a fixed time frame. Otherwise people get confused. Now I'm seeing 65 minutes chart, should I go to 30 minutes or 15 minutes chart to get a even early entry? If you go to early and go to an early entry, then you may also get whipsawed several times. So if you are a positional trader or a swing trader and you are looking at the views on weekly and daily, then execution time should be on 65 minutes. So when I say 65 minutes, your structure should be looking at the 65 minutes.
I
And
think one question a lot of people are maybe that aren't too familiar with charts and technical analysis, and honestly, maybe they are and they're still not familiar with this because I've been in the markets quite a while and I didn't really understand the 65-minute time frame until a few years ago. The reason why we're using a 65-minute time frame is because there's 390 minutes in a day, and if you're using the hourly candle, you're actually having that last candle is not a full hour, and so using the 65-minute time frame allows you to have 6 even candles, and just wanted to point that out in case some were questioning, what's with the 65-minute.
yeah,
But there is a lot of logic to that time frame.
perfect. And I learned this from your video some time ago when you showed this 65, and I kind of transformed my trading style to fit that, and that makes a lot of sense that you are getting 6 even candles. So that's a
Well,
very
I learned it from Brian Shannon, so I it was something that I was taught as well. So I think the biggest thing in trading is paying it forward and teaching people valuable information. And I'm glad that you were able to see it. But
yep,
the big shout out goes to Brian Shannon for really nailing that one in my head and kind of making me realize, oh, that's the reason why we're using this time frame.
absolutely. And in India markets, I know some of my friends are trading 75 minutes for the same reason, that they get the even candles instead of hourly candle.
Yep, exactly.
Good. So keeping that view in mind, if I am short here and I have to do a long entry, what level I will go long? Would I go long just at this level when the price, I don't know whether it is consolidating, whether it would fall or not. So what I would look at, I will look at structure. So structure is like, when is the last time, what is the last attempt made by the bulls to go up? So if I see this is the last attempt made by the bulls, so this would act as a resistance, then I'm falling down, At this level, it took a little bit of support and then a little bit of strength came in, but it failed miserably with a gap down next day. So I would say this is the immediate one before you can go to this level. And then finally this one again, next attempt made, that this is still not broken, it
Mhm.
again fell down. So what I would say is this, so how I look at it, that this particular chart is the when I'm making a new low, what is the last significant high where bulls made an attempt to go high and failed? That's the kind of cycle I would look. So if I am at this level, this is my last level. Before above this level, I will start looking for long trades. Unless the price is not closing above this, I will still be short.
Mhm.
Similarly, when this is a little bit new low than this, so for me, this level is the new level. Above this, I will go long, or I will start looking for the long entries. And this also, correlates with this one. So I would say that this all three, if you see, I'm just going a little deeper in here. This level becomes a supply zone while I'm going up. And the
Mhm.
moment price, breaks through this and comes back and take a support on this, this becomes a temporary new demand zone. So you can see it broke up and then came here. This little, pin bar, came here, which means the supply is kind of drying. So you can take an entry here, go up, again came this level and go. So this is how I look at the chart. So this supply zone became, the moment it broke, it became the demand zone. One short, second short, it is not making higher highs, so it is failing to make new highs. So it's kind of making lower highs. So it means that it is weakening. The moment it will break this level, there is a high probability that it will fall. So it seems same thing happened here. So now after this particular level becomes a new level here. If you see this, as
Mhm.
long as SPY is below this, I am expecting this to go down. The moment it goes above this, then this is becoming the next target zone. And
Love it.
here,
And
yeah,
are you looking at gaps much when you're trading?
no,
Like gap.
I'm no, gap can act as a support and resistance, but overall I would see where exactly the bulls or bear failed before they actually start falling into a specific position.
Love it. Makes sense.
Yeah,
Great. Well, as far as SPY goes, we definitely have levels to watch. Now, I
yeah,
know you wanted to go over a couple other
yeah,
charts.
yeah,
What
absolutely. I'll
what
just
else
move.
are you thinking as far as SPY is
So
kind of our main one we want to look at just for an idea of the general direction of the market. But I know you look at it a couple other ones to
yeah,
one
sure.
keep an eye on, but then two just to trade kind of over and over again.
Sure. So I trade a lot of Tesla. So
Hmm.
here also, if you see this, this is a very nice supply zone where so this was the level I was watching, and I traded a lot in this section, and then it moved up. While coming down, I was thinking that this while it was falling, I was thinking that it will come to this level, but it did not come. But this breakdown at this level also failed. There was no follow through. So this did not become a proper short. Anyway, looking at the larger consolidation, this level again holds good and may act as a support in future as well. But right now, Tesla is also kind of consolidating between these two zones. So right now, this is 465 range and this 350 range. So that is the at a daily chart level. Let's see what weekly says. Weekly also is overstretched. It may come to this level. This is the same 335 level. If you see this is where, yeah, this level can act as a demand zone at a weekly level. That's what I'm
Yeah,
looking for.
Tesla's an interesting one because
Yeah,
it's just still so high from where we've been over the
yep,
last year or two, and it's the one thing that makes me a little nervous about Tesla, but it doesn't matter what my emotions are
yep,
about the market, but just the fact that there's so many people holding at a profit. But the thing about Tesla is, I hate to say Tesla is kind of a cult, but it kind of is. Like there are people who would literally never sell their shares, and what happens is if nobody's not going to sell, you have no supply to drop the price, and
correct.
that's kind of what's been interesting to see with Tesla here is
Yeah,
just there's just not a lot of people that sell.
absolutely. So now I'm looking at Tesla. If it comes in this range, then I will see if the price gets rejected, and then I will, because if you see this is, if I treat this as a new low after this low, then before touching this new low, Tesla price consolidated here, and bulls made this last attempt and failed. So I'm going to use this zone as a resistance zone. So the moment price comes this side and I will see some rejection, I will see if I can look for short opportunities. It may also, um, you know, this is also kind of trend line if you look. So at end of the day, it should come here, get rejected, and then fall further. So I'm not going to look at the long entries in Tesla at all right now, unless and until this zone breaks, price moves up, take a pullback. I'm a pullback trader. I'm not a breakout trader. So I look for pullback opportunities at demand and supply zones. So if it breaks above this, I'm not going to buy at the breakout. I will let it go wherever it wants. It will come down to this. In the meantime, this EMA 21 will also go up and will be in this zone somewhere. And then at that level, I will take my pullback entry and I'll carry the long. Right now, I'm only looking for short opportunities in Tesla. Just going by this.
I love
Yeah.
it. I love it.
Yeah. Let's look at Apple. Apple, I traded the most recent one is this one. I was in options position. I wrote the 116 call and bought a 117 call. Basically, I was in a credit spread for Apple just the day when the results were supposed to come after market hours. So at this particular pin bar, I built my position, and next day it gapped down and it expired worthless. So this is similar to what I said, that it tried to took the this particular supply zone, acted as a supply here, and I was short. I know that it is a earnings call, but still I went by charts and no influence from earnings or results or any other news. Simple.
Hey, simple's better most of the time, if not all the time. So I love it. And just to confirm, it looks like you're generally just using one moving average as kind of like a
Yes.
baseline.
Yep. Yeah, over a
Okay.
period of time, I mean, I've been using EMA 21 for almost 15 years. And it's not that I'm looking at something like specifically as a moving average. It just gives me some sort of comfort, or my eyes are trained to see patterns or slope for EMA 21, and then I club it with price action and then take the trades.
Makes sense to me.
Yeah.
Makes sense to me.
And if you see in Apple 65 minutes, there is also a kind of pattern like inverted, like head and shoulder here, if you see. And this particular line is the neckline if it broke. So what I'm thinking is that at this moment price is below this, it may come again to this level and may see some sort of, and there is also a gap here in the price. So that's what I'm looking at right now. So right now there is no trade. I did the expiry, like it was on Thursday, and next day it was expiry. So it expired. So I'm not right now, not in a trade in Apple. I will see whether it moves up, moves down. Right now, this is no trade zone for me. I'm just waiting for something to come.
Hey, and that's the thing. You don't always have to trade. A lot of
Absolutely.
people, I even know people who have chat rooms, and some traders who are subscribed to them will say, "Hey man, why you're not trading? What's going on?" Or and I think a lot of people think that you always just have to be trading to be a successful trader, but honestly, most of the traders I know
Yeah.
take their positions very seriously. They're not just like, okay, today I'm just going to decide midday what I'm taking there. It's kind of a process, and
Right.
you're kind of stalking the entire the whole trade and the price action rather than just jumping in randomly.
Correct. And this is the daily chart for Apple, and this basically candle. If you see, this candle was on 13th October, where they launched the iPhone 12. So basically, on the good news, a lot of dumping happened here. So look at the volume. So that was an opportunity where a credit spread was built. So I took that trade at the end of the day, built that credit spread, and again it went down. So these are some of the things which of course comes with experience. What you need to look at the price action, whether it is supply demand. And how I build this supply zone is that while before making this particular high, it took a little bit of support here in this like 3-4 days. It hanged here. This
Hmm.
smaller candle became a little bit of demand zone. Then the moment price broke this zone, this one again, for this large candle, it went up, it hit the same zone, and then it fell. So basically this is what the demand zone, like basically it turned from demand to supply, and then again this acted as a supply zone, and it never went above that. So that's how, I look at the supply, simple demand, supply demand zones, and rejection or acceptance. These are the only two things which I look for.
Like we just said, simpler is better. And honestly, at the end of the day, uh, supply and demand are really the only drivers of price.
Correct.
Some people will say, "Oh, it's a news event. It's this, it's that." Well, yeah, the news event is the trigger, earnings is the trigger, but the price is moving because of the underlying supply and demand forces at work, and that's the biggest thing, is being able to identify these levels and being able to see how price is respecting them. And one thing that I always like to do is, the more times price has respected something, the more powerful that level is. So
Right.
I think that's just kind of across the board, whether you're using supply zones, demand zones, trend lines. Just the more times the price has tested that area, it's definitely an important area. So I think we have time for one more. So let's jump
Yep.
into, I guess we got Ford going here.
Yeah, so Ford is also like like if you see this is a demand zone. So if this breaks down, then of course you can see this another pattern being built. Again, I don't look at these pattern, but at end of the day, it's very clearly visible that this is a very strong demand zone Ford has picked up, and then it broke this high. It did not sustain. Very high volume candle. Of course, most likely it is selling if it does not break the high and sustain above. So
Hmm.
exactly, this is also kind of falling down. Similarly, I traded this WKHS also in last couple of months a couple of times. So if you see, this is also 65-minute entry zone, previous supply zone. It broke the recent high, heavy volume here. It did not sustain, broke down, and then it never turned back. Similarly, it took a couple of times. These are the demand zone candles. It tried to hold this for a long time, but it did not. And then finally it broke, and it is consistently carrying this like EMA 21.
I was gonna say that's pretty impressive. I don't think I've seen price respect an EMA like that in a while. So wow, that is clearly making the market at this point on the 65-minute candle for sure.
Yeah, absolutely. So there are plenty of charts. Nicholas, SPC. I traded some of these charts in the recent couple of months, and last month has been one of the best month I ever had. But all simply following my process, following my charts, and that's it. So that's I follow, and I encourage people not to run after money, or follow your process. Money will automatically follow. You don't need to specifically say, I this is my target for today. I will only get out when I will make this much money.
Yeah, and I always hate to bring up the casino thing, but if you go to a casino, a majority of people are gambling at a casino. The people who are actually making money on some type of consistent basis are people that have some type of process, some type of strategy. And it's gambling when you don't have a process, when you're just going off a whim. But it's really a process when you're looking at the probabilities, you're looking at setups that you've seen before, and actually
Yep.
looking at things from a strategy and a process perspective, rather than just impulsively doing something. Obviously, you have to be somewhat impulsive to buy. You have
Right.
to have some type of force to tell you, hey, buy now. But a process and some type of process behind that gives you a lot more ability to manage your risk, manage position sizes, and just stick to a plan. And I think
Absolutely.
that's the hardest thing in trading, is just sticking to a process and a plan.
Absolutely. And I always insist on this thing, that all the time you have to manage your risk, right? If you're not managing your risk and you're over trading, doing revenge trade, I lost some money and then I want to make double of that. And
Hmm.
in order to do that, I do my double quantity. Then of course, these kind of tradings will always, put you in a more harmful situation. So always keep your risk intact, have your risk reward fixed, and then only look for trades which is coming true to your favorite setup or the setup you trade. Don't try to make every single day profit and see that I want to make some money today. And I mean, there are people who do the compulsive trading. Every day they want to trade, but if your setup is not appearing on your fixed set of charts, you don't need to trade. There is no compulsion.
Yep, exactly. You may feel like you want to trade, but there's a lot of things that you probably feel like you want to do that you probably shouldn't. It's
Yeah,
just one of those things. Managing emotions is huge
absolutely.
in the market, and if you can't manage your emotions, that is a recipe for disaster. So before we end this, I'd love to get your thoughts on VIX and what you're seeing. And so we've got the daily chart up here, very
Yep,
defined range. I mean, VIX is
absolutely.
really trading in quite the range right now.
Right. So this is the absolutely heavy supply zone. If it hits tomorrow after the election, so this may be acting as a supply zone, and of course there is a possibility that it will fall. Right now, I see this is a range currently. This is the interim, or you can say in middle kind of supply zone. It is trying to break this and
Mm-hmm.
trying to hold this right now. If you see this one, EMA
Mm-hmm.
21 is also kind of rising. So if it falls down, it may take some support here and then try to break it up. But right now it's in the middle. I'm definitely not going to take any position from VIX perspective in the middle right now. Either this was
Well,
the yeah.
I was gonna say tie it with that, and then that seasonality of only 13% win rate for the month.
Exactly.
Now that's we're looking at a monthly statistic there. There's still going to be a lot of
Yep.
movement within the month, but it is something to keep in mind that really since 1990, it's the VIX has not had a great close for November, at least as a function of the previous month during election years. So it's going to be really interesting to see where we go from here.
Right. Right. So let's see how things turn up tomorrow. A lot of volatility is seen. I think the SPY this week, like 6th November expiry, ATM calls and puts are somewhere around 6.5 each. So basically $13 premium for a straddle. Let's see how it folds tomorrow. It would be worth to watch how things fold, and then accordingly, if some good trade comes up, I will take. But otherwise, right now I'm just in the wait and watch mode.
Hey, I love it. I'm kind of right the same way as you, and honestly, I'm even considering just hanging up the hat for the rest of the year, locking in my profits. But time at the same time, there's always an opportunity in the market, and this is something JC Peretz always says: is the market is a market of stocks. It's not the stock market. Just because SPY is going down and just because QQQ is down today doesn't mean there's no trades, but you have to make sure those trades align with your risk tolerance,
Correct.
your overall strategy. And that's something a lot of people I know, they generally are trading the same thing over and over again because they know how it works. It's like if you go play poker and you go to a different poker table every other hand, you're
True.
never going to have an edge because you're going to have to relearn how everybody's playing the game. But if you're playing at the same table, you start to pick up on people's ticks and their
Absolutely.
bluffs. And it's the same thing in the market. You can see how the market's being made in a particular stock. And the more you trade that stock, the more used to that kind of volatility or that particular stock you're used to. And it's just, from my perspective, I've always been more successful trading something I'm familiar with.
Yep.
You have to relearn the spreads. You have to relearn, just everything about a stock when you pick a new stock to trade. So
Right.
just something that I've kind of learned in my experience. And it seems like you're kind of the same way. You just trade what's working, and you
Yep.
don't deviate from the plan. You don't fix something that's not broken.
Absolutely. Absolutely.
So, all righty. Well, everybody, Price Action Trader at PAV Leader is the Twitter handle. You can definitely give them a follow. We really appreciate you coming on tonight and sharing your thoughts. It's going to be a very interesting next week. Who knows? I don't. I mean, who knows what's going to happen? Is the election going to do another 2000 where we don't know a winner for weeks at a time? We'll just have
Yep.
to see what happens. But at the end of the day, if we stick to our process, keep our emotions in check, we all should be good. So thank you so much for joining. Your overall analysis and your feedback and just intuition of the markets is really impressive. And we're really glad to have you on as a guest. And thank you so much.
Thank you so much, Jake, for providing this opportunity. I thoroughly enjoyed our conversation and looking forward to keep talking to you. And thank you for all the great work you are doing. This is a fantastic platform, and I really like your charts. And we'll continue to look forward to learn more from each other. Thank you so very much.
Hey, you're very welcome. Everybody have a great night. Thank you for watching, and we'll see you soon.
Take care. Bye bye.